Welcome to Markets Now. I'm Michelle Rourke with Jim McCormick with agmarket.net. Well, following the WSDA, we are seeing higher prices in corn and soybeans, a little bit more mixed action in the wheat market. And Jim, let's start off talking about soybeans. We did see lower yield, lower ending stocks, but were these more than you were expecting?
Yes, it was, Michelle. The trade was looking for the bean yield to get a little bit lower. The government did go after it pretty heavy, but going back and talking to clients here the last couple of days, the last couple of weeks, the big complaint was how dry the beans were and the amount of bushels they lost due to that dryness. And that definitely, I think, showed up on today's number. So we definitely got a bullish surprise on the yield. They did lower the crush a little bit. They did lower the exports a little bit. Now that seems a little bit interesting on the lowering of the crush due to what the bean oil is doing right now, but that's traditionally what the USDA does, Michelle. If a crop gets smaller, they tend to lower demand a little bit. And now you got a bean carry out around 470 million, less than what we think. But the reality is it's still relatively comfortable, especially when you look at the world supply.
No doubt. I mean, you look at it at face value, 470 down 80 million bushels on ending stocks. It feels like a bit of a relief. But like you said, we still have that big Brazilian crop coming, and USDA is still at 169 million metric tons for them, aren't they?
They're at 169, and when you look at it, even with this revision, you're still looking at, I believe, the highest raw stocks carry out for beans on record, and either the first or second highest stocks use on record, assuming Brazil has this trendline yield crop. Right now, their planning pace, Michelle, started off way behind pace. They've caught up. They were actually a little ahead of pace coming into this week. So right now, I think you've got to go with like the USDA is. You got to go with trendline yields, and that is essentially going to give the world too many beans. You throw in the risk of a potential trade war with China. I think the big market will have some risk if that does play out due to competition from Brazil and potential reactions to any tariffs we might put on.
Yeah, it's been a big week here in terms of not just the WSDA, but like you say, the election results and how the market has reacted to that. Talk about what you see going forward in terms of the impact of tariffs on soybeans, because it really won't impact this marketing year. It would impact the next marketing year, right?
In general, more than likely to affect most of it, it'd be the new crop, because remember, President Trump does not get inaugurated into January 20th. So even if he did make an executive order, he could not do it to January 20th. So most of the beans we're going to be, that they've bought this year so far, hopefully will be shipped. But there is a risk that China could preempt us and maybe do some cancellations. So I don't want to say all the risks are off the table. But like I want to state, Michelle, even pre-trade war, if Brazil's crop is comfortable, is normal, and the world feels comfortable with the supply of beans, I don't think beans can hold up here at these levels, unfortunately.
So do you think, though, even before the election, we will see more front loading of exports on soybeans, especially from China?
I think you're going to try to. But there is a window, because remember, it may not necessarily be when he signs the tariff. It kind of depends how the Chinese do it. They may say, look, even though you got the beans bought pre-tariff, but until they cross the Chinese border, if they don't cross that border before we retaliate, that buyer, that importer may still get stuck paying the higher import tariffs of our beans into China. So there's a window when they may just walk away and say there's too much risk. The other question we have is, like I said, is he technically can't do anything until January 20th. But if he starts the rhetoric and really starts talking here the next couple months pre-inauguration about what he's going to do on day one, the market may even react pre-inauguration.
No doubt. So we are up a bit on soybeans after the report, but really we had a lot of this, you think, priced in already, or we had rallied so much that this really isn't making a big impact, is it?
Exactly. We got to remember, we had a pretty big move up on a couple things are driving it. Some people were buying on reaction to pre-buying before a potential trade war. The other thing we're watching here recently is the bean oil market has caught fire as it's chasing the palm oil market, which supplies are tightening up in Malaysia, and that's driving it up, and then it's helping pull the beans up. But you got to be a little bit cautious, folks, on that, Michelle, because the reality is there is a limit to how many beans we can push through the crush system. So even though the bean oil market may continue to go up, we can only crush so much out there. So what it will do is it will build out the profit margins potential for the crushers. So there is a limited amount of demand. And like I said before, if Brazil has a big crop, I think, that will have an impact as well.
Yeah, that bean oil market has just been on fire for sure. Okay, let's talk about corn. Yield down 0.7 bushels per acre, and we did see about a 60 million bushel drop in both production and ending stocks. Is that a little more than you were expecting there too, or is that surprising the market at all?
I think it is a surprise to the market. It was lower than the average trade guess. And it was a little bit lower than I thought. I thought the corn yields held in a little bit better than the beans did in harvest, but that's what the government got. And I think in general, it's probably pretty accurate. As we were talking before we started recording, they did cut Illinois' corn crop quite a bit. And I thought Illinois' crop at 122 was always a little bit optimistic because that was about 8 bushels above the previous record. So that's a pretty big jump for one record to the next. So the downward revisions do seem logical. The government, interesting enough, they did them lowering, unlike the beans where they lowered the crop, lowered the demand, they did leave the corn demand unchanged. Now we'll see where that's at. Corn sales recently, Michelle, have been phenomenal. We're about 50% ahead of where we were a year ago. The real question is that a change in buying habits and the world buyers are going to buy more corn from us? Or just like the beans, are they just essentially pre-buying, front-loading a potential trade war? But in general, the carryout coming in below 1.9, I believe, is a little bit friendly. But I'm not ragingly bullish corn because, like I said, I'm bearish beans. If beans go down, it's awful hard for corn to stay at these lofty levels compared to beans.
Absolutely. I agree with everything you said. As far as technically, we are above, I think, the 50 and 100-day moving averages on corn. Do you think we will keep going and take out what we have, the October high we have to take out yet, don't we?
I think we jabbed through the October high briefly. I think, technically today you want to see a close above it. And then you got the 200-day moving average a little bit above that. Those are going to be critical resistance points to see if we can take through it. I think the corn market's going to be a little bit, even corn market, but even that, Michelle, all the markets are really going to be an interesting dynamic right now. The charts are definitely turning a little bit friendly. Normally when you see a friendly chart, you see the funds come in and build length. But I really find it hard to believe the funds are going to want to build a bunch of length into the grain markets in front of a possible trade war. So that's the one thing we're going to be watching in the industry. The other question is, where does the farmer get engaged? Harvest is wrapped up in all but a vast majority or a few areas around the Midwest. They've put the grain away. The question is, what does this price movement do? When you get the corn price back up near the fall highs, is that going to be enough to engage the farmer to start moving grain out of their bins? That's the next question. If the farmer gets aggressive, that will limit the rally as well.
Absolutely, and that's been happening all the way up here, that's for sure. One last question about the exports. As we said, USDA did not make any changes there, which is surprising considering the pace that we have seen. But do you anticipate at these levels that demand is just going to keep coming at the market just from a value standpoint?
I think in general, we're going to see some demand here, but I think you are going to get to, just like these higher prices, you're going to get a point of diminishing returns, and they're going to wait and see what happens. Like I said, the $1 million question right now is the sales. Mexico has bought about half of its anticipated needs, and we're only a quarter into the marketing year. Are they going to buy more? Or like I said, is this all front run in front of a potential trade war? Because remember, the trade war this go around may be a little bit different. Last time it was just with China. Trump has pretty much said that he is kind of mad and he wants to essentially tariff pretty much any country out there, Mexico being one of them. We import a lot of cars and car parts from Mexico. He's also talking about tariffs with Europe as well. But the other thing is dynamic that's interesting about these tariffs is he's talking about using the tariffs to finance the government, which makes it a little bit harder to, once he puts those tariffs in place to generate revenue, it's going to be harder for him to take those off, because if he starts taking those tariffs back off, Michelle, the question is, where does he make up for that revenue shortfall? And that's where you could get into an inflationary spiral potentially.
Yeah, that's a really good point that you make there, Jim. Let's wrap up with wheat. We're kind of mixed here right now, but we didn't get a lot in the report in terms of the wheat market domestically or for the global standpoint. So really now it's about what happens with weather, and we're kind of watching to see politically or geopolitically what happens with the Black Sea, aren't we?
Exactly. Weather is going to be the key. We are seeing some improvement here in the United States to more rain. On the political side, we'll see. President Trump has said that he figures he can get a ceasefire or an end to the war in Ukraine. If you would get into the war in Ukraine, it could be a game changer to the world market. Because remember, I'm sure it's a lot more expensive to get grain out of the Ukraine, and Ukraine's a big wheat and corn producer due to the war premium. So they can get if you get that war to calm down a little bit, you're probably going to see more competition out of the Black Sea than we've seen the last couple of years. So something to keep an eye on.
Okay, thanks for joining us. Jim McCormick, agmarket.net. That is Markets Now.